Stocks over in Europe are rising, as we showed you earlier, so let's get more detail on what exactly is happening. We'll head over to London and Rashad Salamat for what's moving markets. Rich?
Yeah, I mean, we see the FTSE just erase some of the gains that it's had. It's now down in the session, but it doesn't really detract from what's happening overall. The Dow Jones Stock 600 index actually rebounding from its biggest two-day drop that we've seen since April, some calling the rally over at the moment now. But today's price action coming as raw material producers climbed. We've got commodities in the mix and also Oracle's earnings lifting technology companies as well. Let's take a look at Rio Tinto, world's third biggest mining company, on the way up this morning, up, 81 pence right now, £21 a share, 4% plus the gain. Anglo-American also similar sort of rise there. Xstrata nearly 2% up, and really behind that, well, lead and nickel and copper gaining here in London. Let's look at the Oracle effect now. SAP, world's biggest maker of business management software, adding in its session there on the back of those Oracle results that we had, and its German shares, Oracle's German shares, I should say, traded onto the upside as well. Let's take a look at some of the economic news out there, and in terms of economic forecasts that we've had today, the OECD, the Organization of Economic Cooperation and Development, have raised its outlook for the global growth picture for the first time in 2 years, but it's not saying the same for the Eurozone. It's saying that the 16-nation bloc has signs of a recovery which are not as clear as what's going on in the rest of the world. Now, it does this as it cut to its 2009 forecast here to show a contraction of something like 4.8% for the countries which share the European single currency, and that's compared to its previous forecast of 4.1%, which was back in March. It does no longer anticipate a 0.3% decline next year, stagnation, so things are perhaps improving in 2010 as far as that one goes. Now, some better news if you own luxury property in London. Houses and apartments in the most expensive districts of the capital, worth more than £1 million or $1.7 million, increased in value by 4.3% compared with the previous 3 months. That, according to the property broker Savills. It means luxury home prices in London climbed in the second quarter for the first time since the market's collapse started in September 2007. Scarlett.
Bloomberg's Rich Salamat in London.